Hello trading friend. Today we're going to talk about quite common question, when to stop or resume trading. So quite often I receive questions, especially nowadays when we have this very unfortunate situation of war between Russia and Ukraine. Questions like, do you stop your trading? Or what do you do in unexpected situations like this? Well, let me tell you, first of all, I do not normally stop my trading just because of some occasional unexpected unfortunate event. So overall, if you do your strategy development well and if you use a vast data history, it is quite obvious that a lot of these events and unexpected situations were already included in your backtest. So for example, we did have very specific situations in past when it comes to Fed interest rates, quantitative easing. We had different kind of wars. We did have COVID situation. So we have a lot of different situations in the past in our backtests. And I'm a believer that everything mostly was here in the history already. So for example, I did not stop any trading right now, even we have all the situation with Russia and Ukraine and natural gas and crude oil, and I very rarely stopped my trading in the future. I used to do it a long time ago, but then I realized when I compared my trading results as they were because I stopped my trading, and as they would be if I would not stop the trading, I came to conclusion the results were sometimes pretty much the same, and sometimes I would pretty much lose potential money. I mean, stopping sometimes produce a worse result. So I decided just I'll keep going with my trading most of situation, most of circumstances. Now, of course, sometimes that means that I have to withstand a lot of volatility and I have to be quite resilient like nowadays, but that's part of trading. Nevertheless, sometimes we do make exceptions in my hedge fund, and so far we made this exception twice, but we did not stop trading. We just decreased our exposure in certain market area. So we did significantly reduce exposure in energies. I think it was approximately 2 years ago when crude oil price dropped into negative territory, below zero, which was quite unprecedented. Nobody would believe at that time that this could even happen, yet it happened. It didn't make any logical sense, yet we saw negative prices. And I don't know how about you, I just cannot trade negative prices. So that's where we significantly reduced. I think we paused crude oil trading for a couple of weeks completely, and we decreased position in energies. And then with the beginning of COVID, we also decreased our overall trading in indexes. And sometimes when there's a very volatile overall market mood, we like reducing our exposure in certain area of markets, like as I said, energies or indexes. So for example, instead of running 5 index strategies, we can reduce just down to 2 strategies, index strategies only, and 2 energy strategies only. So we do not stop our trading completely, not at all. I haven't been doing this for a while already, and I'm pretty much against that because, as I said, most of situations are already embedded in backtests, and we already, we should be ready for anything because we are a trader. However, if we see something as unprecedented as negative prices, then I like reacting. But overall, again, I do not stop my trading because of worldwide situation, economic political situation. I do not stop my trading because of interest rates and Fed announcements. A lot of traders are like, oh, there's supposed to be this Fed announcement and they're supposed to do this and markets are supposed to do this. how do you know what markets are going to do? Many times in past I thought that markets would drop because of Fed announcement, and they just skyrocket, and I didn't realize my profit because I used to be scared of these events and stop my trading. I do not do this anymore. In our hedge fund, we do not do this anymore. We just keep trading through all these situations, because if you get caught into this mentality that there could be potentially something that could potentially mean something else, then you would be in a fear mode all the time. Because nowadays, especially nowadays, we have some news every day, scary news, crazy news, economical news. So you would really, very quickly, you wouldn't even not know what to do. You would be switching on, switching off like crazy, stopping, resuming, and your trading would become one big mess. So again, as I said, I'm a big fan of just going through all the volatility. However, if you feel it's too much of a stress for yourself, you never ever make a mistake if you reduce your portfolio, if you reduce your exposure. That's totally okay. You need to feel comfortable. If you feel too much of a hit, reduce your positions, reduce your portfolio a little bit, decrease the number of strategies in certain market category. That's all okay. But again, I do not stop trading. I just keep going. So that's all. I hope that answered your question. Thank you for being here with me today, and I'll see you next Tuesday. Meanwhile, happy trading.